Oil India and ONGC in focus, gaining in today's trading session as Brent crosses $75 per barrel on OPEC Plus delaying output hike and uncertainty around the US elections.
Bharat Forge in focus after Class A truck orders in October fall short of seasonal expectations. North America orders are down close to around 6% on a month-to-month basis, but up 2% on a year-on-year basis. The stock as well is holding higher because there is hope that there could potentially be a large order win.
JK Paper down over 2% after a disappointing set of numbers in the second quarter. The net profit slumps 58% to 129 crore, while the EBITDA is down 35% year-on-year.
Tilaknagar Industries and PNG Health, they are surging in trade after reporting a strong set of numbers in the second quarter. The stock is up close to around 10% today after recording a 4% fall yesterday following its weak Q2 numbers. Hello and welcome to Chartbusters. It's a far better looking screen and flat is good, I would say, because after yesterday we saw a lot of selling pressures. The Nifty is more or less flattish. The Nifty Bank is up close to around 130 points and the mid-cap index mildly in the red, though we have more number of stocks that are advancing than declining. You know, Mangalam, if I pull up a chart of this advance decline ratio, that's where what is encouraging. Right. Just around 45 minutes or so ago, it was even Stevens. Now you have more number of stocks that are advancing. So when they kiss, they, interchange some pleasantries, and now you have more number of stocks advancing. So I like it.
Well, it is good, but what is important again is where the market closes, and that is something we will keep an eye out on as we speak. Just a little over that 24,000 mark on the Nifty. We are facing some sort of supply in today's trading session. The Nifty Bank a shade better. Good time to welcome Shilpa Raut of Prabhudas Leeladhar for a quick technical check on the market. Shilpa, we've seen a big decline. Do you see a bottom in the near term? Is there in the offing, or is it still a no trade zone? Because after so much decline, one can, obviously not go short. But is it time to go long yet? What are your thoughts on the indices?
Good morning, Mangalam and Nigel, and thank you for having me on the show. Talking about indices, yes, the setup does look, too oversold. But however, if you look at the, Nifty overall PCR, it's still at 0.885 right now. So there's room for, to slip a little more further down towards 0.65. Then, you will be sure that there will be some sort of a definite bounce back. FI's net longs also hovering around 23% right now. They can do, little more, they can add more shorts from here, which can dip towards 15%. Then you will be very sure that there will be a bounce back. So this room for little more correction is still there. As long as 24,250 on the upside is not decisively taken out, I would still believe, there's only sell on rise rally, and we should test 24,450 zones, which is where the 200 DMA is also placed. So that is where the bounce should come very decisively. So I'll not be going long at all. Any rally on intraday basis also, I believe, there's only an opportunity to go short.
Okay, all right. You're looking at shorting the index. Got that, Shilpa. What about individual stocks? What do you have for us?
Nigel, I have one buy and one sell. The buy, I believe, this chemical fertilizer sector is little looking good today. The screen is, favoring the scripts there. So be it Navin Flooring, be it Jumble Fertilizers or PI Industries. So I have given a buy recommendation, Prabhudas Leeladhar, for PI Industries, but of course, little positional. So any declines towards, 4,400 should be a buying opportunity for PI Industries. That's where the support lies. And if the view stays right, you will see a very strong bounce, and the targets on the upside is very huge. It is towards 4,800. So the positional trade, but I believe the risk reward is very well placed. The sell would be in Berger Paint. Berger Paint is now trading below 520, which is very crucial for the stock to, sustain above for any sort of upside. So I believe, again, a very favorable risk reward trade. Keep a stop loss of 525, and you can go short in Berger Paints and look for targets of 490 to 480.
Okay, all right. Shilpa, I wanted to ask you on Reliance Industries, because if you pull up a 6-month chart, that's been a relative underperformer. What's the view on the name? Volumes in the first hour are very, very high. They're almost matching what we're seeing in the F&O market, which is an unlikely event normally. And there are some calls that maybe, in fact, there is some accumulation that's taking place at around this 1,250 to around 1,300 rupees. Do you see any kind of support?
Yes, definitely, Nigel. I believe this 1280 to 1250 zones, this is the, support area for the stock right now. And if this view again stays right, you will see a sharp bounce towards 1380 to 1420 zones for the stock. So one can start accumulating right now on declines also towards 1280. I believe, the stock is having the potential of only very limited downside, but a huge upside potential.
All right, we keep an eye out on Reliance. If the Reliance stock has a huge upside potential, then it will support the Nifty as well. The stock is about 20% off its 52-week high. Thanks a lot, Shilpa, for joining in once again and giving your views. A bunch of stocks which are now gaining some sort of traction. We have IndusInd Bank, which has moved to the high point of trade. And after a big drubbing that we saw on Bajaj Auto yesterday, that stock too seems to have come back a bit. So just pull up the intraday chart of Bajaj Auto. You see that stock having moved higher as well. The other one that's doing well is Jubilant FoodWorks. Jubilant FoodWorks has actually spiked to the high point of trade with a gain of almost 3% maybe the festive season having done well for them. We'll keep an eye out on how they report their numbers for the second quarter. Let's shift focus to our special segment. We get you a few ideas for profit coming in from our colleagues at Money Control Pro, and today we have Sachin Pal joining in with the stock.
Yeah, thanks. The stock in our ideas for profit today is SG Mart. The business was earlier known as Kintec Renewables but got acquired by the APL Apollo family group last year. Since then, it has raised a large amount of capital from both the promoter family as well as institutional investors and has been able to scale up its business to almost 1,200 crores of quarterly revenues within the first 12 months of its operations. The business primarily operates in the B2B construction materials market, which has a huge size to the tune of 4.5 lakh crores. However, the market remains fragmented due to the absence of large dealers and distributors within the overall country. The company operates in three business verticals. First one being the pure B2B trading of steel and other products. The second one being where it provides the value-added services to some of the large OEMs as well as the consumer durable players. And the third one being the retail arm, wherein it will be supplying some of the components which are used in the construction materials through using the APL Apollo brand for the non-steel products. Well, the company has a large amount of cash on its books, and which is to the tune of almost 800 to 1,000 crores at this point of time, which should help the business scale up further in the coming 2 to 3 years. Overall, it aspires to reach a turnover almost 18,000 crores by FY27. And at current valuation, the company is trading at less than 1 times EV by sales. It's an interesting play for accumulation from a long-term standpoint. Investors can therefore look forward to accumulate the stock at current levels.
Right, with that, we'll take a short break, come back, we'll get you more on the markets and stock-specific action on the other side. Welcome back. Just keep an eye out on Bata. The stocks moved to the high point of trade, opened in the red. From there, in the lower levels, we saw some buying, maybe because of two factors. One, the results were soft. The stock had seen a correction before that itself. And secondly, the management did allude to 2 points indicating positive growth in the very near future. One, premium as a proportion of sales has increased. And secondly, the festive season has gone well for the company. So let's see whether this sustains or not. We'll keep an eye out on Bata. From lower levels, the stock has seen a bit of a recovery. The other stock which is doing well is Hatsun Agro. It's up almost 10%. At one point was up above that as well after recording a 4% fall yesterday. The results, if you look at it, they're just stable with slight worsening in the gross margin sequentially. So if you look at it, the revenue grew by 8.7% year on year. The street had factored in numbers in double digit. That's telling you about weak consumer sentiment. But despite that, the EBITDA grew by about 10%, 11.6% margins versus 11.5%. The net profit saw a decline year on year, largely because of depreciation. So that's a non-cash expense. What's interesting is the gross margin trend, and you watch this specifically not only for Hatsun, but for all the other dairy companies too. If you look at it, from the second quarter last year to the last quarter, there has been a sequential increase. And now, quarter on quarter, there has been a decline in gross margins. Is this a one-off or is this cyclical? Is something we'll get to know, because that will be important for the entire dairy industry. Typically, milk procurement prices move in a cycle. Is this the first of a cycle, or maybe we will see recovery in the third quarter? Is something that we'll get to know only from the management and some more details out there. The street currently appreciates these numbers that have come by but commentary on how milk procurement prices are going to be would be extremely crucial.
Well, thanks, Mangalam, for spotting that out. So, Bata, there were a couple of internal positives, and Hudson as well. Numbers look good, but sustainability is going to be crucial. Let's focus on a couple of other numbers then. Amara Raja, the stock trades lower, posts its numbers. Sudarshan joins us to run us through the key highlights. Sudarshan.
Yeah, the stock is under pressure after reporting a quarter that looked soft and numbers were operationally below estimates. EBITDA has missed estimates by nearly 5%. Gross margin has expanded sequentially by more than 100 bips on favorable product mix. But if you look at YY basis, it's down more than 100 basis points. If you talk about the numbers on YY, profit was up 7%, revenue has increased 12%, even EBITDA was higher by 8%. Margin, though, has slipped by 50 basis points. Also, talking about the investment that company is making in the new plant, that it has invested 55 crore into Amara Raja Circular Solutions. With this new investment, total investment in that solutions now stands at rupees 500 crore. Commentary, though, from the company that coming in, it's looking largely positive. It says revenue growth was aided by healthy volumes in automotive aftermarket and export markets, and company has seen good traction from the new geographies that company expanded in the last quarter. Also, it's on track with construction of new cell manufacturing plants. So overall, commentary is looking positive, but numbers for Q2 have largely missed estimates.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's focus on the metals pack. And earlier today, you got the China's National Steel PMI number, which rose by close to around 5 basis points. It's moved to around 5 points to around 54.6 for the month of October. Now, the national index has returned to expansion zone for the first time all the way since March 2023. Which is good news both for steel as well as for iron ore. And that's why some of those stocks are doing well today. So that could be one factor at play. The second factor is there is hope that there could be some duties that will come in imports. Now, in the last quarter itself, I'm pulling up some industry data. Imports went up by close to around 40%, on a year-to-year basis, which comes up for you on the screen. While you have exports that actually have gone down by close to around 29%. So that's why the industry has been telling the finance ministry and trying to make a strong case that we want some kind of protection. Will that come about? Well, we'll have to stay tuned for that. And the third factor is the second half of the year is normally a seasonally strong one because it's post the monsoon, it gets into busy season as well. And normally you'll see production sales volumes as well pick up. And we have one company, one major that's already delivered its numbers, which is JSW Steel. They said in the month of October, steel prices, on longs as well as on flats are up between 1,000 to around 2,000 rupees. And they're saying that they got the benefit of lower coking coal cost in the past quarter. But in the coming quarter as well, it could effectively be lower by more than $20 per ton. So put that together, you'll see that the spreads will expand in the second half of the year. So 3 top points. One is the Chinese National Steel PMI number that went back into expansion territory. Second is there is some hopes that there could be some duties to protect the domestic industry. And point number 3, a far better operational performance is what we're likely to see. So those could be the potential reasons why metals are higher.
All right, Nigel, thanks a lot for explaining that to us. With that, we'll slip into a short break, come back at you more on individual stocks on the other side. Stay tuned. Welcome back. Even as the mid-cap index is down about 0.5%, trade today can be classified into two segments. One is Dawa, the other is Daru. Why do I say that? Because if you look at Dawa, you have Lupin, which is down about 4%. The last couple of days, the pharmaceutical stocks have been doing well, but today they're coming in for a bit of selling. So we have Lupin, which is lower. You have Torrent Pharma, which is lower, or even something like a Zydus Life, Aurobindo, all of them lower. So if you look at just the pharmaceutical index, you would see that there is some bit of a sell-off on that counter. But on the other hand, a lot of the alcohol stocks or alco-bev stocks are doing extremely well. Case in point, something like Tilak Nagar Industries reported a strong set of numbers, especially on the operational front. Management commentary as well was fairly positive, saying that the second half would be better than the first half, even though they fell shy of upping their guidance for this year. It will be very interesting to see, how the business pans out, especially once Andhra starts to come back on track. A 16% up move is what we've seen on that one. The other ones which are doing well are both United Spirits and United Breweries, both of them up and about in today's trading session. Alongside that, we have Global Spirits, which is moving higher as well. Earlier in the day, earlier in the week to talk about it, but Daru doing better than Dawa, Nigel.
Well, that's right. And Tilak Nagar is going to be interesting, Mangalam, because I think we'd asked the management, I'm wondering what's going to happen on that Imperial Blue, because we know that Pernod wants to go ahead and sell it, or that's at least the intention. And we know a couple of PE names are in there. So will they go the whole hog? It's going to be a large asset if they have to even participate, because reports indicate it's a 5,000 crores odd. Management said that they look at prudent inorganic growth. So let's see what happens on that front. Numbers were good. Can they diversify away from that brandy? That's going to be quite important as well. Yeah.
Or look at newer markets in brandy
Indeed.
itself, apart from south, going further up north as well. But let's talk about some more numbers that are due today. And this one comes in from jewelry major Titan. Why do I say, the street is prepared for these numbers? Because one, Titan has already given a second quarter update for the quarter. The most important thing to track would be whether pre-buying has happened already for the festive season, largely because of the reduction in customs duty, which aided demand. Margins would be important to track as well, and also the outlook on studded jewelry given the solitaire price decline and the impact of lab-grown diamonds too. What do we know from the second quarter update? Standalone revenue up ex-bullion has grown by about 25%. Jewelry revenue has grown by 26% after a soft first quarter performance. Overall studded sales grew in low double digits for the quarter. That means that the studded ratio has come off as well. What does all of this mean for the standalone overall business? 16% revenue growth. You're looking at a number close to 13,500 crores on the top line. The EBITDA grows slightly shyer. 6% is the growth that we're expecting there, which means that there would be a 100 basis points decline in the overall margins. The net profit grows about 5%, just shy of that 1,000 crore mark. Watches and wearables grew about 20%. Eye care grew 6%. Emerging businesses up 14%. Carrot Lane grew 28% with studded ratio higher as well. Again, like I said, management commentary on margins, festive season, pre-buying for the wedding season in the second quarter itself, and outlook on studded jewelry would be key to track.
Okay, all right. So we'll wait by for that. Well, for the time being, as we wrap up, here's a programming note. As CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policy makers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. This is where the roadmap for India's next 25 years of growth and global leadership will be charted. You don't want to miss this.